everyone. This is Avij Chatterjee and Rohan Singh. We're recording our weekly Chartsarefun session the week of July 22nd. Today is after the market closed on July 26th. We're going to talk about the rotational action continuing from moving money out of the big cap, the mega cap, Magnificent Seven stocks. QQQ has been down quite a bit and the money rotating into small caps. This week in particular, QQQ dropped almost 2.6%, whereas small caps was up 3.4%. We'll talk about Tom Lee's predictions on the market. We talk about Steve Eisman, the famous big shorts person who made a ton of money when he predicted the mortgage collapse back in 2007, 2008. And then look at Chartmeister, Carter Braxton Worth, his predictions on the market. We'll look at two of the story stocks, Tesla and Google. Both had announced earnings this week. These are the two of the Magnificent Seven. See how their stocks just responded after earnings. And then end with crypto. We know Bitcoin has been on a tear, has come up a lot since its early correction early July. Almost from a 53,000 has been up to 68.5. We'll see where that's headed. So with that, let's share the charts and look through the patterns for the market. So this is our Chartsarefun YouTube site. I welcome you to subscribe to it. And if you like the videos, please hit the like button. Help us share it with a wider audience. We talked about last week about small caps, rotational action in there. And we've also started tweeting about them on our Twitter site at Chartsarefun or my personal tweet site at Chartsarefun. Very fortunately, we tweeted to Tom Lee's market prediction about the big movement in small caps. He was very kind and gracious to retweet that, and that got us a reasonably amount of good attendance and viewership of our YouTube video last week. We've also been blogging quite actively once every morning. Early morning, we tend to put out our blogs. It's at Substack, chartsarefun.substack.com. We appreciate you subscribing to it. It's free, and sharing your thoughts, and hopefully you'll benefit from these blogs. So with that, let's look at what happened in the market today. We had the core CPI PCE data, which is what is the core inflational data that the Fed watches. And Liz Ann Saunders posted about it. The PCE inflation came in at 2.5 year over year, which is slightly higher than the 2.4, but still on the steady decline as we see here in the trend chart from 2023 till 24. We have a steady decline in PCE. In fact, there has been now chatter about the Fed, of course, is going to be at their FOMC meeting next week on the 30th and 31st. We can hear from Chair Powell on 31st, but there's now been some chatter that perhaps not just one 25% cut, but maybe two 25 basis points could turn to 50 basis points of cuts in the September meeting. So if you get a 50 BPS in September, definitely that helps small cap stocks because they're very, very sensitive to interest rates. So with that, if you look at Tom Lee, he was on CNBC recently, just the day before. He continued to pound the table about the rotation out of large caps going on into small caps. He sees a very strong summer rally for small caps. Originally, I had talked about 40% rally in small caps over a duration of 10 weeks. We had seen a 27% rally in IWM during the span of 8 weeks from November to December last year. This time over the summer, from like when CPI data came out and we got a negative print month over month, he had made a strong, bold prediction that we're going to start now see a massive movement up in small caps, benefited by the interest rate cuts and a very dovish Fed moving forward. There's also, talking about a political side, maybe a Trump win is what the market is pricing in. He talked about that could favor the small caps, helping the domestic companies, especially the fact that the tax rates now may be reduced further down to 15% corporate taxes. And then the September cut continues to be a tailwind for the market, for the small caps, and hence remains to be very bullish. In adding to him, if you look at the Steve Eisman, he was also out and he talked about the mega cap weakness, but very interesting enough, he talked about this as kind of a rotational kind of movement, not a fundamental correction as people are expecting. This is more of a rotational movement going on from the across sectors, across stocks. So basically, money moving out of the mega caps more into the small caps is what he saw. He continues to see very bullish on the AI story. Also continues to be very bullish on Apple, and he said he's fully invested. He wants to just hold on to his holdings, and he sees this play out over a multi-year time period in a secular bull trend, not being nervous whatsoever about the pullback we recently saw. Carter Braxton Ward, the chart meister of Fast Money, was also on Twitter, but he also was on the Risk Reversal that Guy Adami and Dan Nathan conducts. And he basically said that, look, the steep trend line that we had joining the lows of S&P 500 got broken this week for sure. So that's the red line. And then he basically said that S&P is back to its ascending channel, which we can see joining the tops and the bottoms from like late 2022 to early 2023, and in that channel now it's back at that. But what he expects is he doesn't expect the S&P to correct all the way down to the bottom of the channel, but at least if you see this blue line, which is the 150-day moving average, he sees a potential play of the breakdown below the red trend line towards the test of the 150, and that's around 5250 of the S&P 500. So that's where Carter is expecting that the correction or the market movement could happen towards. Now, if you look at small caps and we look at the ascending channel triangle in here, that's at 211, tested 211 again before breaking out, and you can see the higher lows 190.8, 198.4, and kind of ascending through the lows. If you draw the trend line, that measures to a ascending triangle breakout target of 232. So we've not quite gotten there. We got 226, a pullback, a sharp pullback to 215, and then this week, even though Nasdaq sell-off continued, we got a very strong movement in small caps, and it's back above, reclaimed from 215, closed near 224 today. So there's still about 8 points or so that we could easily see next week. And if the Fed does turn out to be dovish, some people are even expecting a rate cut next week on 31st. But if that doesn't happen, it's unlikely Powell will do a surprise. He doesn't like to surprise the market. He has not really indicated a cut next week, but he might give an indication, a clear indication of a cut coming into September. And with folks expecting 2 cuts, like a 50 basis points, that could be very bullish for small caps. So expecting this continued climb in small caps into 232, and then maybe a little bit of kind of a digestion, but then the bigger trend that we see here is this long-term cup and handle on the weekly chart of IWM. We can see here out from 211 down to the 158 level, 157.99 that we tested in June of 2022, went back to 211. So that breakout, roughly from 158 to 211, if you take that, it's about 42 plus 11, that's 53, or 54, add that to 211, that's at 265. So that's where we think IWM is headed, and we wouldn't be surprised to see this play out, as Tom Lee says, over the span of this summer, over the next 6 to 8 weeks. It's quite possible that we could get there. So with that, let's look at Carter Braxton Ward's another interesting point that he shared on Risk Reversal about S&P to Nasdaq-100. Everyone talks about Nasdaq-100 and how great an investment it is. He took from the early 2021. That's when, from the post-COVID move, most of the speculative stocks had kind of moved up, and then from there, we've basically compared the Nasdaq 100 NDX index in green, S&P in blue, and what you see here is they are pretty much on top of each other at 39% gains since then. So this is going back to from like late February of 2021. That's when, as I said, when the speculative SPACs and all were kind of peaking out, and they had corrected quite a bit from there. Even biotechs had kind of peaked out around then and corrected quite a bit. So from there, we can see that initially, you did see the S&P kind of gain over the Nasdaq 100, outperform. Then towards late, December into 2021, and then when this strong correction came in, we saw that the Nasdaq 100 corrected a lot more. So the drawdown in terms of the two was actually much deeper in Nasdaq 100 at 37% versus only 27% in S&P. So his point was that you're probably better off investing in the S&P 500 in a more diversified fashion. In this time frame, we can clearly see that there's no benefit whatsoever in the Nasdaq-100 in terms of gains, but you actually got a much more safer way to move out and have the same kind of risk reward in terms of S&P versus small caps. Versus the Nasdaq-100. Now, if you look at the put call ratio, which is an indication of where the market thinks the the bearishness versus the bullishness is, often people start buying puts when people expect corrections, and they start buying calls when there is extreme bullishness in the markets. It's in many ways a contrarian sign. Put call ratios, typically what ends up happening is they spike up during when market tends to start correcting to the point that, as they start falling, the market starts rising, as we can see here. So whenever we have a duration when put call ratios spike up, we start seeing corrections. And we've seen over multiple identified rectangular regions here where we can see that whenever, and we've drawn the, kind of growing up trend in the put call ratio from late November to early 2022, then from the March to the May timeframe and so on, and more recently into March and April, where we got the last correction in the markets, and we can see that the put call ratio in this case was upward trending. We just started an upward trending in put call ratio. We see that the PPO has just turned above the zero line. We can see that whenever it turns above the zero line for a few weeks, it kind of stays above the zero line, and that's when the correction happens. So right here, when PPO was above the zero line, we got a correction right here. Above the zero line PPO, we got a correction right here. Same thing here, and now PPO is the first print above the zero line, so we can expect perhaps for the next few weeks, 2 to 3, 4 weeks, we could have the summer correction. We could continue to have a drop in the S&P 500, something to look at. And Carter's prediction of 150-day moving average test couldn't be ruled out as a possibility that we could perhaps get that movement of S&P 500 towards the 5250. Now, that said, let's look at the QQQ, the Nasdaq-100 ETF, and we look at a classic head and shoulder top here with the neckline around 473. We had a left shoulder from 473 towards the 482, 483. From there went back to 503, pulled back very sharply last week, came and tested that 473, got a counter trend move on Monday, Tuesday this week, and then we broke down with heavy volume and a gap down. So this was a breakdown that measures towards 443. So that is potentially also where the 150-day moving average of QQQ is. So it's not just the S&P 500 testing its 150-day moving average. There's a possibility that we could get that test for QQQ as well. So 443 is our measured target, and that easily gets us higher than 10% correction that we had talked about or blogged about earlier this week. We already almost got the 10% from 503. We reached out to 455. So that's roughly 48 points of correction from 503. 10% on 503 would have been about a 50-point correction. So we almost got a 48 point, but we had a bit of a climb today. Up QQQ was up 4.7, up 1%, but maybe this is a counter trend rally, and then we could continue getting the pullback towards the 150-day moving average test and the head and shoulder breakdown target 443. So that's something we need to look at next week and see what the market does. Now, looking at a trend line as we start joining the lows going back to October of 2023 near 340, and as it climbs higher, that meets around the 450 level. And we can see here there are two sets of support zones. One was the 459 peak from where it pulled to 450, 442 and went to 503. We did break below that. So 459 was broken this week. We did a 455 test. The next test is around the 447, 448 level. That's call it the next support zone. So there's a confluence of supports of that, of 447, 448, the rising trend line, and then potentially the 150-day moving average and the head and shoulder breakdown towards the 443. So that's where we are expecting QQQ to head, and we would be a bit cautious chasing or buying additional positions till we get there. And for those that you already own existing positions, I would say continue, definitely hold on to it, but we could definitely have an upward swing back from here, and the key is again to buy in weakness and perhaps wait till we get that pullback towards the 443. We asked Grok, which is the Twitter's AI service chatbot, about what was the cause of Tesla's earnings. And part of what they said was there was expectation from analysts of 62 cents earning. They announced 52, 10 cents short. There was profit margins that have dropped a lot from 18.7% a year ago. We know that they've been cutting prices and that's been hitting margin. That came down to 14.4, and there's just overall demand for vehicle sales has been coming down as well. And they've already warned that 2024 isn't going to be as great a volume growth as they've seen in 2023. So that overall was what Grok said. And we look at Tesla's chart with respect to its ascending triangle. It already met its target. So that 138, 167 draw trend line from its higher lows and then across the level around 203, 205. If you measure that 203 to 138, that's roughly 65 points, and added to that, it measures right around 105 plus 66 is about 271. So that's where so 138.8 is about 139 to 205 is basically, 139 is 61 plus 5, 66. So 66 plus 205, 271. That's what we met. The target was exactly met. Since then, we got a pullback, and you look at the Tesla's channel forming, it exactly pulled back from the top of the channel to the bottom of the channel. So that's kind of holding. The channel so far hasn't broken down. So we'll have to see next week. And it's also kind of closed out the gap right here around just above 212 level, the 213 level. So that's kind of almost come to a gap close. And from here, we could perhaps resume a climb if the interest rates come down, because it'll help Tesla. The main reasons why people haven't been buying EVs is, again, interest rates being higher. If interest rates do start coming down, it's a discretionary spend. Discretionary sector overall has been kind of weakened by muted demand because of high interest rates, and the higher for longer Fed rhetoric. But if we start getting lowering of interest rates, this could perhaps help Tesla, and it could get a rebound, something to look at. We also asked Grok about the other Magnificent Seven earnings this week, Alphabet, and Alphabet actually had good earnings. If you look at their EPS target was $1.84. They beat it. They had 189. The revenue target was 84.37. They beat that at 84.74. But the key thing that the market did not like was their cloud business. The cloud unit has not been able to show as much growth as we can see with AWS or with Azure, and that was kind of a laggard for the market. Didn't like that. And if Google's key play is AI, and that's a competitive edge to grow their cloud unit, market didn't like that. And they continue to spend a lot of money. And this was the other part where you say, what did Google say about AI capital spending? Well, Google talked about 49 to 50 billion of annual capital spend on AI. In fact, Sundar Pichai talked about the risk of underinvesting in AI is much greater than overinvesting. So he's not concerned about his capital spend. He wants to continue, which actually is a direct beneficiary is NVIDIA, TSM. They can continue to resume their strength because of this capital spending remaining strong. But the market has started wondering about the ROI of all of this, and that's the key. If you're going to be spending this capital spend, what is the ROI? So next week when Microsoft announce, Apple announce, and Meta, they are also big spenders on, not so much of Apple, but definitely Meta and Microsoft are big spenders on AI capital spend. Market will be watching for ROIs. Is that resulting back in revenue? Microsoft in particular with the Copilot offerings, how well are they able to monetize on AI? And we know that Google got strong competition with OpenAI announcing their search GPT. So directly competing with Google with Perplexity, they have come out with their search GPT came out yesterday afternoon. It'll be very interesting to see how the the market continues to challenge these AI spends relative to ROI and sees benefits from it. Now, Google chart had a beautiful channel test as well, from the top of the channel to the bottom of the channel. We can see if we draw through the rising tops, the beautiful channel up there, and then to the rising bottoms. It pulled back from 193 at the top of the channel towards the lows this week. In fact, today at 165, right at the bottom of the channel. We expect this channel to hold 161, 162. That's kind of a level of support. Worst case, if it does break down, maybe it'll pull back to the 155, 156, maybe even have a 200-day test around the 154. but there has not been as much volume in the selling off as we saw when it had declined higher. For example, this on June, it had kind of broken out higher with strong volume. So that's something to watch. We are seeing that MACD is kind of getting a bit oversold, and it has pulled back below the zero line. So and RSI is also towards the 30 level. So we could have perhaps done the correction in Google and then maybe start looking at some of a resumption in trend line next week, something to look at. Finally, I said we're going to talk about cryptos. We're going to talk about Bitcoin. Bitcoin has this beautiful bullish flag from 24K rising up to 73.8, 74K, and then forming this flag pattern with a slightly declining trend line. So if you look at the top of the tops and the bottom of the across that channel, it tested that 53.5 and has climbed to 68.5. So that's roughly a 15,000 point in a very rapid duration in the month of July over a span of 2 to 2.5 weeks. So that 15,000 above to added to 68.5 measures to something like 83,500, 84,000. We think that there's a very good chance. Today we had a very good move in crypto, up 3%, closed near the 68K. Next week we expect this to continue and likely break above this channel and climb towards 83, 84. So we are bullish. We think that Mara is the way to play it. We expect Mara to be headed to 31, 32. Riot is the other miner, but we think Mara has got more upside percentage-wise. And then of course you have the Bitcoin ETFs like GBTC, FBTC, IBIT, and several others. One ETF in that play that plays twice the Bitcoin is BITX. That one looks quite attractive, does pay monthly dividend. This just paid a dividend this week at 65 cents a share. So that's another way to play if you're really, really bullish on crypto, is to go look at the BITX and get a twice X move in the Bitcoin with that ETF. With that, good luck trading. We'll talk to you again next week. Thank you.